Risks and where to play your money in these times. Rob Hay is joining us from Collins Street Asset Management in Sydney. Rob, welcome back to the program.
Good morning, David. Good morning, Nadine.
Good morning to you.
So, obviously, markets have had a very strong run, including equities. We've seen a bit of profit taking creep in here. A lot of people are starting to go and talk about spread of virus and obviously the potential for a shutdown. How can investors go and play this market, and how can they go and hedge themselves against the potential for further downside?
Look, markets have been incredibly volatile, and certainly coming into the COVID-19 market sell-off, the Australian consumer has been heavily indebted, and I think Jerome Powell put it quite well when he put forward his recent report to Congress, where he was talking about persistent fragility. And we have these here in Australia as well. For us, there are some sensible ways that investors can go about hedging their exposure to this volatility. First and foremost, gold being one example of that. Now, gold has had a cracking run over the course of the last 12 months, up a good 40% in Aussie dollar terms. And there are a number of different ways that investors can play it, either through physical gold, ETFs, or gold stocks.
So I'm curious to get your thoughts there, Rob. At Collins Street, are you playing them through specific, the gold narrative, through specific stocks? And if so, which ones?
We're playing it through gold-specific stocks because we feel that stocks that have known production profiles, known resources, and exploration upside can represent good value through to investors. We just have to be very careful, Nadine, that we're not paying too much for them. Some of the larger cap names on the ASX are trading 20, 30, 40 times earnings, which naturally skews the risk heavily to the downside. Some names that we have been investing in include Nova Minerals and also Ora Banda Mining. Two very different stocks, Nova Minerals being one which is exploration based out of Alaska, and Ora Banda Mining being one which is very close to production and expected to start bringing cash flow in from 2021.
Sorry, Rob, can you just repeat the second name there and give us perhaps the ticker code? It's not one that we talk about very often. Where is it domiciled? Obviously here in Australia, but where are the operations and the projects happening?
Nadine, the ticker code is OBM, and they're based in the Eastern Goldfields, just east-northeast of Kalgoorlie. They have some existing infrastructure there, which is very promising around their Davyhurst project, which is where a number of particular gold deposits will be feeding into over time. So being very efficient for them to process that gold, very efficient for them to dig it up and bring it to market in line with their business plans.
So you, as value investors, are obviously seeing, good value in those names in particular. Is there another sector where perhaps value emerges if we start to see more volatility? Because, of course, we've got a lot of unknowns, as you've detailed, coming through, not just for the economy here in Australia, but really globally.
Yeah, so there are some sectors, particularly healthcare, which presents opportunities as well. That may not seem like a natural fit for a value investor, particularly if we have a look at the multiples that the likes of CSL, ResMed and Cochlear are trading on. All three of those are fantastic businesses, but based upon where they're trading, quite expensive for us. Where we've found value has been in those small to mid-cap stocks, one of which was recently brought into the ASX 300, or will be as of the 22nd of this month when it rebalances, which is Paradigm Biopharmaceuticals, which is a company which has a drug which has been essentially repurposed. It's a drug that has been used for many years and has a known safety profile in humans as a blood thinner, but which is being repurposed for osteoarthritis. So if we have to think about the demand drivers for a drug like or a treatment for osteoarthritis, they're very strong and they're global in nature and largely inelastic as well, in that people who have these conditions will naturally seek out treatments for them. Not being linked to the very indebted Australian consumer, and where perhaps there are greater elasticities and greater trade-offs that can be made around consumption, it is one that we feel has got good tailwinds moving forward.
Yeah, I did a little bit of research on this company lately. Again, though, it is still in the early stages of bringing this drug, closer toward commercialization. Yes, it is a proven, known treatment in other, areas, like it's used on other in another sort of manner. But again, these biotechs, it is a bit of a risky proposition for most investors, is it not still?
Paradigm are moving towards their phase 3 trials, and they're expected to have completed their trials largely within the next 12, 18 months. And bear in mind that Paradigm Biopharmaceuticals had a special access program as well, where people were able to get treatment using the drug. And as a result, there have been known results, known feedback from real patients. And so it's not as though it's a company which has simply gone through its standard 1A, 1B type trials without any specific feedback around real life results being provided. So to that extent, a lot of the risk has been taken out. Bear in mind also, Nadine, they have $108 million in cash on the balance sheet to fund them through, so they've got a good, strong balance sheet. And they have a range of different opportunities moving forward, be it in terms of the NFL players, the former NFL players who have been treated, and the continual trials which will be brought out and announced over time.
Yeah, and just completed a $35 million insto placement at the beginning of April. So again, putting those towards the second phase 3 osteoarthritis trial. All right, so that was, for our viewers who are following at home, Paradigm Biopharma. The ticker code for that one is PAR.
Rob, I might just get your thoughts very quickly too. In terms of the risks facing investors not moving forward, in your opinion, what is the greatest one out there facing financial markets?
There are a number of risks that we need to be aware of, and for us, there is a perfect storm which we see eventuating over the next 6 months or so. What we have in Australia is a situation where we've had some good stimulus and good support, and that support and stimulus has come from a variety of sources, be it in terms of federal government initiatives, but also in the way that the big banks, or all banks in Australia for that matter, have been supporting the Australian consumer with a range of home loan deferrals and the like. Over the course of the next 6 months, we're going to see things like your JobKeeper, for example, pull back. And now that may taper back rather than simply be withdrawn, but nonetheless, there'll be a smaller amount of money being splashed around in that area. And alongside that, people who have their home loans, who have been used to the idea of having those interest payments and principal payments deferred for a period of time, will now, or will at that point, be in a position where they have to start paying it back. And then the third element to all of this, David, is where we have the property market come into play. Those people who are tenants who have had rents deferred, those commercial tenants who have either deferred rent or have had rent waivers of the like, and would be in a position to pay back or make good that difference back when all of the support comes off in the next 6 months. So there are a number of factors here which will come into play, which could cause the broader Australian economy to have some substantial risks to it.
Interesting time ahead. Rob Hay, thank you so much for joining us today, and we'll speak again soon.
Thank you. Have a great day.
Thanks.